We are live.
All right, so today we're going to go over market structure, and this is a trade I took. As you can see, the profits are there. It's about 4,000 on the S&P 500. I trade futures, but it's the same thing, same type of price action if you were trading SPY or SPX. So I still have one contract on whenever I take profit like this, and when it's a larger position, I like to leave one runner on as my final take profit was not hit yet. So the goal of this live is to show you how you can do this and how you can increase your win rate by having a good understanding of market structure. So I wanted to show the trade now so you get an idea of what we're trying to do. We're going to go over the concepts, and then we're going to come back and review this trade. So the premise I used for this is I always like to have a bias on the daily time frame. So we're going to go over what these type of things mean and why today my bias was towards the downside. So first off, it's so important to identify the trend. Now you'll hear the saying, the trend is your friend, and that's true, but I feel like most people don't put enough emphasis on market structure and how to use the trend to trade off of. Now, number one, as you can see, an uptrend means price is making higher highs and higher lows, simple. Downtrend means lower highs and lower lows. So simple, but I find often that traders make trading more complicated than it needs to be. When really using this as a premise on the daily time frame for any asset, if you trade crypto, Forex, futures like me, or stock options, you always want to look at the daily time frame and determine, is the market bullish, bearish, or in consolidation? Again, higher highs, higher lows, or lower highs, lower lows. The daily time frame is so important. That's what the banks and institutions use. So the majority of your analysis should come on that. However, you use the lower time frames, the 1 minute to the 5 minute, to look for your executions based on your bias from the higher time frame. So looking at higher highs and higher lows in price action, this is the S&P 500 futures, but it's the same price action on SPY. Might be a little bit different because you have more hours to trade off of in futures. But notice how this is back in January to almost April. This is a nice trending market. This is a market that we want to be trading in. We don't want to trade when price is consolidating. Notice how every single higher high and every single higher low is respected. Notice how once a higher low is made, price does not come back down there to break it or to even test it because price is in an uptrend. In a downtrend, lower highs, lower lows. Notice how price never comes back up to test lower highs. And again, how you identify these is, simple. The middle candlestick is going to be higher than the one surrounding it to identify a swing high. And then for a swing low, the opposite is true. The middle candle is going to be lower than the surrounding candles, right? So this is a lower low, but this is not, right? So important to identify higher highs, higher lows, because as you could see, what happens once a higher low is disrespected. This higher low right here gets disrespected, then price enters into a downtrend. So break of structure, all that means is a continuation of the trend. So as you could see, every time price comes up and breaks the most recent swing high in an uptrend, that's a break of structure. And typically when we're trying to form our daily bias, that's going to be our target. On the downside, the opposite is true. These lower lows, that's the break of structure. Again, it's a continuation of the trend. You want to make sure that on the daily time frame, price keeps breaking above the most recent swing high, and then in a downtrend, price keeps breaking below the most recent swing low. If it doesn't do that, and if price forms a higher swing low in an uptrend, then we can start talking about the market structure starting to shift. And this is how it looks in price. As you can see, break of structure above the most recent swing high in an uptrend, break of structure below the most recent swing low in a downtrend. So what we're going to start to base this off of, now this is my bread and butter for market structure and for identifying my trades. I use this both on a daily time frame, and then I drop down and I find this same setup in a lower time frame. You should always be doing that. You should never be basing your trade off of the lower time frame, because you're not seeing the bigger picture of things. And the banks and institutions, they're trading on the daily time frame, the weekly, and the monthly. So my daily bias at all times is going to be based off of those higher time frames. I'm only looking for the executions on the lower time frames. So as you could see, a bearish market structure shift is when price is in an uptrend, and then all of a sudden it's not. And it's not because the most recent swing low gets violated. And our point of interest is going to be the gap that's left somewhere on the leg that violated the most recent swing low. A bullish shift is when price is in a downtrend. Then all of a sudden it's not. Price displaces above the most recent swing high, market structure shift. Our point of interest is going to be a gap that is going to be left on this leg that shifted the structure. All right, so what does this look like in price action? So as we saw this image before, this is the daily time frame, by the way. Remember, you should always be basing your analysis off of the daily time frame. Price was in an uptrend. All of a sudden, what happened? It wasn't. Market structure shift. Most recent swing low violated, market enters a downtrend. Again, so simple, but so many people overlook these basic concepts. And trading with the trend is so important, because it'll be like, if you trade against it, it's going to be like swimming against the tide. It's almost impossible. You know, it's going to improve your win rate so much more if you're on the right side of the market. Here, what do we notice? Again, daily time frame, market structure shift, right? But it's not energetic enough. How do we create a definite market structure shift? And the answer is with displacement. Now, displacement is a quick, energetic move that creates a market structure shift. This could be one candle or multiple, but displacement is really the most important element to my trading strategy, because when we have displacement, that means that there are bigger players at play in the market. That means that the smart money, banks and institutions, are entering. You know, they can't enter and, you know, cause no volatility. When they enter, you know, things are moving quickly and energetically. I can't stress that enough. So again, we said that this was the market structure shift, but the definite market structure shift occurs with displacement. Quick, energetic push that overlaps the most recent swing high in a downtrend. So notice how price was in a downtrend, making lower highs, lower lows, until it wasn't. We get the market structure shift with displacement, price consolidates, and then goes higher. Now, what does this look like to the downside? We have displacement. Remember, this is technically a structure shift, but a more definite one occurs with the displacement. Seeing this quick, energetic push means price wants to go lower, right? There's other forces at play that are pushing price lower. As you see, it overlaps the most recent swing low, price continues selling off. Another example here, won't focus too much on these for now. I want to get to liquidity because that's the next important element that's so important in market structure. We want to identify key highs and key lows. So keep that in mind. Swing highs, swing lows. Generally, what are swing lows? Support, right? And generally, swing highs are what? Resistance, especially if you have relative equal highs, that's resistance. The purpose of the market is to provide liquidity. So the fact that me and you can buy and sell almost instantly, the market has to move in a certain way for that to be possible. And as a result, the market is always moving in search for liquidity. And we can try to identify this. It's not always going to be perfect like anything else, but we can try to identify this in price action. So an algorithm is controlling the market. A lot of the moves we see happen so quick. And as you can see here, algorithms run the market. It's a fact now. The fact that me and you can buy and sell almost instantly, and the fact that you see these quick moves happen right when news is released, that's not human trading. That's machines at play that can react so quick because the algorithms are programmed to react off of every single word that comes out, off of a news release, off of a Fed speaker, off of anything that happens in the world. So that's why you see, when the Fed says something, when the Fed says, he's going to expect the housing market to crash, for example, and you see price react so quickly to the downside, that's the algos reacting. Humans simply can't react that quick. So liquidity, it's the supply on shares. Just focus on that for now. Two forms: buy side liquidity, sell side liquidity. Remember what I said: relative equal highs, relative equal lows. Resistance is generally found where? At relative equal highs. Most of retail tend to put their stop loss at or above resistance because they think that can't be broken since it's resistance. But the fact of the matter is 95% of retail traders fail. And that's because most of the time that resistance and support gets violated. And again, that's because if you have a pool of orders there, and if that's where a lot of people place their stop loss and they think that price can't break above that resistance, it's going to do it. Why? Because again, it's liquidity, and that's how the market moves. Sell side liquidity, the opposite of buy side. This time, support lines, relative equal lows. Retail thinks that price cannot break below that. So that's where most of them put their stop loss. And price generally, is going to break below that a lot before moving higher. So after one side of liquidity is taken, we're going to focus on going after the opposing liquidity. I'll show you what that means. Again, we should always be asking ourselves, where is the most obvious liquidity? Where is the most obvious support or resistance, relative equal highs or lows? As we see here, most recent swing high, price runs above that. And then what do we see quickly after? Displacement to the downside. We can now target the opposing liquidity, sell side, relative equal lows. Retail thinks that that's support and can't be broken. What happens? It gets violated. So liquidity and price action, as you see, price breaks below it here, comes back up. That's our displacement. Remember, quick, energetic push. That confirms the liquidity raid. If it's quick and energetic push away from that run on the most recent swing low. So again, displacement, so important. Let's see where we're at here. We're going to go back to the trade I made today. Now that I've introduced the concepts, it's going to make more sense explaining it based on a trade I made today. And whenever you're learning how to trade from someone, it's important to see if they actually know how to trade. They teach the concepts, but teaching is easy. Can you use the concepts? And this is a trade I made today. Right now it's almost 1. I have 1 contract on still. Whenever I make a trade like this, like I said, I like to keep a runner on just in case, and then move my stop loss down accordingly. But using what I just taught, looking at the daily time frame, remember, that's where the bias comes from. Where is the most obvious liquidity? Where do I think price is going to go? Now, this most recent candle is today. Notice how we have this high right here. What does price do? It runs above that and then pulls back, right? Also notice, what is the trend? Well, price was in an uptrend back here until it wasn't. Price had displacement that overlapped the most recent swing low. Then price entered into a downtrend. But what is it doing here? Price is now, for the moment, entering into an uptrend. Most recent swing high violated with displacement. So now, just as price came back into this gap right here, I was expecting price today to come back into this gap here. And that's the premise for my bias. So now, since we have the daily time frame mapped out, we think price is going to go lower. Why? Because we have this draw on liquidity, this gap, right? And price already ran out the buy side back here. So there should be no reason for price to go above that. That should be the high for the day. Again, it should, not going to be right all the time. So once we have the premise from the daily, we can then go to the lower time frame. And I like looking for my entries on the 5-minute. So we have that run on buy side. This same run on buy side is around the same level right here. So right when we see price run above an old high, for this example, we want to drop down to a lower time frame and confirm that that's a liquidity sweep with displacement in the opposite direction, which we get. So once we see, so my trade setup goes like this. Number 1, rate on liquidity, right? First, before anything, you have to observe the market structure of the daily time frame. That'll increase the win rate. I know that price ran out this liquidity, and I know that we have this gap down here. So that what's that going to do is increase my win rate from, let's say, from 50% to possibly 60 or 70%. What's going to increase my win rate even more is waiting for confirmation on the lower time frame. Liquidity run is step 1 for my trade. Step 2, displacement, market structure shift. Price completely disrespects the most recent swing low right here. So that's step 2. Step 3 is to wait for price to come back into what's called a sell side imbalance. Now, I was calling it a gap before. It's a gap in price. Price only delivered to the downside here. Remember what I said. What's the purpose of the market? To provide liquidity on both sides. Here, price only provided liquidity to the downside. So what does it have to do? It has to come back up and fill in this gap, because there's no candle on either side, before it moves lower. So these red arrows are my executions. So that's step 3, entering on the gap or the imbalance that created the market structure shift and displacement. Next, my first target is going to be the nearest draw on liquidity, which is the swing low from the displacement leg. So that's where I took most of my profits, as you could see. Then I left 1 more contract on for the London session low. Session low is very important. Session liquidity is very important. That'll be another class and topic of discussion. But that's where I took my next profit. And I'm leaving 1 more contract on in case price does decide to go back into this gap right here, the buy side imbalance, and form that short-term low. So one thing I want to leave us off with today is market outlook using these concepts. Now, September is usually a tough month. It's usually mixed. The past 3 Septembers we've had have been awful. But if I'm looking at the market structure right now, price looks to be forming an uptrend. because we violated the most recent swing high. We have created a higher low. So now what I'm expecting is price should create a higher low, another higher low, somewhere around here. And then once that gets formed, the next draw would be this high. Now what happens, price can come down. And if it violates a most recent swing low like this, then we'll talk about, shift of structure or possibly consolidation. But what I want to leave us off today is the trend is so important. You want to ask yourself before every trading day, what is price doing? Higher highs and higher lows, or lower highs and lower lows on the daily time frame? Or is it consolidating? Sometimes it might not be as clear, but the trend is so important. Understanding market structure like this will increase the win rate overall, as you can see by this trade I took today. So hope everyone has a good weekend and hope everyone has a good Labor Day.